All right, so we're going to get right into it. For those of you who don't know who I am, most of you do. My name is Garrett Bake. I own the American Contractor Network. This is our home base, right? If you are unsure of who we are and what we stand for, literally just look around. We got our three pillars over here: faith, family, and freedom. Our core values are on the wall over here. And if you turn around, you'll see Old Glory in all her glory for a reason, right? I want you guys to know that in here, we're focused on one thing and one thing only, and that is how do we leverage our contracting business, whatever it is that we do, to get the lifestyle that we want, not the other way around, okay? So we are going to challenge you. This is not just a sit here and take notes. You guys are going to share with each other. I'm going to have some conversations with you, because at the end of this, I want you to take something tangible and apply it back to your business. Fair? All right. Now, first question, why did you become a contractor? Chris?
Started working for other people.
Started working for other people. Why did you become a contractor? Like, you're I should say the owner, right? Why did you become an owner?
Freedom.
Freedom, okay.
Freedom and money.
Brent, what about you?
Following my dad's footsteps.
Right, but why did you do it? What is it that you're after?
Freedom in life.
Freedom in life. Scott? Same. Sounds kind of similar, right? We all have this thing called freedom, lifestyle. So the real question is, why did you allow yourself to become a slave to your business? How many of you guys work the weekends? How many of you are up super early or late? How many of you guys miss family events? How many of you guys postpone things, switch things around, right? How many of you guys, in the end, sacrifice yourselves for your business? Go ahead, don't be shy, right? So why is it that we allowed that to happen, right? Ultimately, we allowed that to happen because we don't understand how to run a business. And here's a really interesting stat, and I want you to stare at it for a minute, right? 92% of contractors say they have customers that don't pay on time. How many of you guys have ever experienced this? What does it do to your sleep, your stress, your anxiety, your family life? I can go on and on and on, right? So we have this issue, but instead of dealing with it, what do? Customer says, hey, I can't pay you till next week or the week after. Or, hey, I'm going to kick back that invoice because we said we were going to do it, but you know what, we're not. What do? What do you guys do? Jeremy?
I hire headhunters.
I know what you wake up dreaming about doing, but you don't hire headhunters.
I got people if you need them.
What do you? Yeah. She needs people. What do?
You panic, really.
You panic, right?
Try to find other ways to fund payroll, to fund bills, to
Rob Peter to pay Paul.
Sometimes you take yourself out of a business owner, put yourself as an employee where you shouldn't be, strapping the bags on,
Yeah.
trying to do whatever you can to make it work. Start jobs when you shouldn't start, so you can collect deposits. So now you're double stacking. This creates a whole nightmare.
A cluster, right? And you've all experienced some varying form of this, right? So how do we deal with it, right? That's the question we're going to answer tonight. Here's another one, right? 72% of contractors have no idea how to manage their cash flow. How many of you guys have ever sat in front of a computer and tried to figure out where your next dollar is coming from? How many of you guys, 2 hours later, are looking at cats in spacesuits on YouTube because you couldn't figure out where your next dollar is coming from, right? Why does that happen, though? It's because we don't know, right? And we fear what we don't know. We fear what we don't understand. So tonight, we have a special guest who's going to help us kind of work through some of this stuff, which, by the way, he's available after, so if you guys have any questions, he's more than willing to help, although I will kick him out at 9 o'clock because, no, I'm just kidding. He'll be here to answer your questions. So what do you guys think leads to cash flow issues? Aaron, what do you think? Cash flow issues. Give me something.
Failure to manage your own business properly.
Failure to manage the business, okay. Omar?
Keeping up with your costs.
Keeping up with costs, yeah. Ammon?
Bringing in more clients and maintaining good workforce.
There you go. Okay. So it's a few different things, right? Now, this isn't the entire list, but here's just a few things, and you guys have probably experienced this. Number one is not understanding payment cycles. How many of you guys have worked with a contractor, you have no idea when you're going to get paid? There's a few of you, right? So a lot of it happens in the commercial space, but it also happens in the residential space. How many of you guys have invoices that you still need to send out that you haven't sent out yet? Right? You get delayed on that, right? It happens. Even though you know you need to get paid, right? You get tied up doing other stuff. Bad contracts. Who's experienced this? You're just looking at you.
I have.
It-
I've corrected it.
You have.
Oh, man.
You have. But again, we learn from experience, right? So bad contracts, right? Slow paying customers. We've all dealt with that. Lack of a change order management, right? They're like, oh, yeah, go ahead, make that change. And then the end comes to pay and they're like, we didn't sign off on that. We didn't agree to that. And you guys have nothing in writing. Who's at fault, right? And then again, lack of resources. So all of these different things plus more lead to cash flow issues, right? Now tonight, again, we're going to focus on 4 specific things, but all in the area of managing cash flow. Now, some of these you're going to be left scratching your head a little bit because it's going to be really big picture, right? This is not going to be a very granular like, hey, every night at 8 o'clock, you should make sure that your invoices are up to date. No, you're all big boys and girls. You should be able to figure that one out. What we're talking about tonight is strategies, big picture stuff that is going to help you in the long term. Fair? Now, I am not a tax expert. In fact, if you ask my wife, I stress her out every time I bring up the T word. So I'm not going to go into detail about this stuff. I will introduce the concept and the thing that we're going to talk about, but ultimately we have brought in another expert, Dan Giannuzzi. Now, Dan, for those of you that don't know him, has lived in Treasure Valley for how many years now?
2007.
A lot of years. Make me do math, bro. Come on, 16-ish years. Something I lost track. I don't have enough fingers. 16 years, right? But he was a roofing contractor here for 15 years. He knows the space, okay? Which makes him unique in the aspect that he has also been an accountant for 30 years. Now, most accountants do not understand the contracting space. How many of you guys have tried to have a conversation with an accountant about something related to contracting and it just goes right over their head, right? So we had to do a little digging, but we found Dan here, right? And really what I like to consider him is a cash flow expert. We have some people in the room who are already working with him, and we'll point out their experience with him. Is a good one, don't worry. But ultimately, what we're going to do is leverage Dan and his background and his experience, okay? So the way this is going to go, there's 4 specific topics we're going to hit. I'm going to introduce the topic. We're going to have Dan come in and talk, and then we'll have some opportunities for some questions during. But really, a lot of the questions, if you guys still have questions, we can answer after. Fair? All right. First topic then. What do you guys think? Does the type of business entity that you have matter? Lauren, what do you think?
Actually, like an LLC or
Yeah, LLC, S Corp, partnership matters. Okay. Who would agree that it matters? 100% it matters. Now, which one is the right one?
I always mix it.
Depends on your.
Well, it depends on how much you're bringing in.
You guys sound like the parents at the baseball game. Run faster, slow down, hit the ball. And the kid's like, I don't know what to do, right? That's where we're at right now. So really it does matter, okay? But how does this affect your cash flow? How does the entity structure affect your cash flow? So Dan, we're gonna have you come up and share a little bit on this particular topic, okay? If you guys are not set up right, pay attention.
Well, thanks for having me tonight. I'm going to draw pictures because that's how I learn, and so I figure other people learn the same way. The main thing that affects the entity selection is taxes. I mean, how much money is going to be taken out of your pocket if you set up your entity incorrectly? One of the biggest mistakes I have from clients coming to see me is that they're set up incorrectly. And the big part of that is a lot of accountants don't know how to help you with that. My very biggest refund that I got for a guy, he's a tile setter here in town. He does a lot of the Jacksons and Mavericks. We amended his tax returns. $54,000 of self-employment tax came back to him. I asked him who did his taxes, and it was a relative that was a CPA. So it's very common. You need to find somebody that has experience in the construction industry to help you with the selection. So the biggest thing, I heard somebody say S Corp, and I just want to address the S Corp thing. The difference between an S Corp and a limited liability company filing as an S Corp is that if you're a heavy equipment operator, if you're a earth guy, dirt mover, and you have all these expensive pieces of equipment for $1 million, and you're an LLC, you can be sued up to $1 million. If you're an S Corp, you close the bank account and you can't be sued. The liability stops there. So really, if your capital investment is, for an accountant, I'm an LLC. I'll close the doors and they can have my desk and my computer and I'm done. But like I said, if you're a heavy equipment operator, you probably want to be an S corp. An LLC can be taxed 3 different ways. This really confuses people. The one way is a sole proprietor. One way, if there's two or more owners, is a partnership. And the last way is an S corp. The differences are that these two right here, the sole proprietor and the partnership, by statute, anything that you make is subject to self-employment tax. Does everybody know what self-employment tax is? Social Security and Medicare. When you're an employee, you pay 7.65% and your employer pays 7.65%. When you make the mistake of doing one of these 2 entities, you pay 15.3%. So if you make 100 grand, you send $15,000 to the government and then you start your tax return. So, which is on 100,000, you're going to spend another 15 grand in federal taxes and another 5 or 6 grand in state taxes. So these are the 2 things that I see a lot of people coming in as contractors with LLCs. The S corp has some little bit of requirements. You can't have more than 100 owners, which is an easy one for you guys. But the 2 big ones are you have to be a U.S. citizen or a legal alien resident, and the owner has to take a paycheck. So, and that does not mean writing yourself a check for $1,000 a week, which is what a lot of contractors think. It is going through a payroll service or an accounting office like ours and actually taking withholding, Social Security, and Medicare out of your check. And it has to be a reasonable paycheck. So if you're making, we have probably 100 contractors that we do payroll for. We pay them anywhere from $1,000 to $2,000 a month. That qualifies as reasonable. Unreasonable, we've had dealerships that make $2 million a year. The IRS has published their cases and they show 0 salaries and they're trying to say that that's reasonable. $2 million in taxable income. So that's unreasonable. When you do this, let's say $1,000, you're going to pay about $1,800 in self-employment tax, which is the Social Security and Medicare. You will not pay the 15.3. So instead of the $15,000 up front, you pay the $1,800. The other thing is you subtract the $12,000 that you paid yourself, and you only pay federal taxes on $88,000 instead of the $100,000. Under these 2 scenarios, you have to pay self-employment tax on $100,000, and you also pay income taxes on $100,000. There's no deduction because you haven't paid yourself. So it sounds, by the looks of everybody in this room, you guys had this concept before, but this is an area where it can cause a lot of heartache. Now, if you think you're tricky and you file the form 2553, it's super easy to be an S corp. Your accountant will file a 1-page form, you sign it saying you're the owner and that you'd like to make the election, and it's guaranteed that they accept every single one. But if you get caught doing something like not paying yourself, one other really important thing on an S corp. If you're like Omar, you guys, if you don't pay yourselves equally, you can get your S corp status terminated. So if one partner takes 5 grand, the other partner gets 5 grand. If one partner takes a paycheck of, whatever it is, you have to pay yourselves equally. All right. If you don't, they terminate your S corp status and you get taxed as a C corp. A C corp is not good. A C corp is Ford, Chevrolet, Micron. And what happens is they'll tax, if you made that 100 grand, they'll tax the 100 grand at a very high rate, at a C corp rate. And then every dollar that you took out of the company, they'll tax it as wages, plus penalties and interest. So it's not pretty. So you just want to make sure that the basic concepts of paying yourself equally, taking a paycheck, you keep those in mind. I got a cheat sheet because there's so much stuff I can talk about. I wanted to stay on task.
Real quick, does anybody have any questions when it comes to either sole proprietorship, partnership, S corp, paying yourself? Now's your chance to ask. Kenny, go ahead.
So you can be an LLC and still file as S corp?
Yes.
Or you have to make the whole transition?
No. Being an S corp is kind of expensive and kind of complicated, and it's really easy to get terminated as an S corp if you don't follow. Because an S corp is a corporation that you file the same election that we're going to file as an LLC, except it's just much more. You need an attorney to file minutes annually. I mean, there's a lot of stuff that has to do. So yes, an LLC is the way you guys want to be set up, and then you file a form. It's a 2553, and basically you're an S corp one day out of the year, the day you file your taxes. The rest of the year, you're an LLC. Okay?
I think there was another question over here.
I think you just, I guess my question was, S corp is the way to go for contractors, basically?
An LLC is the way to go with an S corp election. Yeah.
Because I was an LLC last year.
Yeah.
And my accountant's like, no, you S corp, so. we should
Yeah.
do it.
And that's, again, that's a little bit of the error that some of the accountants are making, is that you don't need to be an S corp. You can be an LLC because you're landscaping, right? Windows and doors. Your tools are, a chop saw, a screw gun, caulking gun.
It was more about the income that I took in.
Right.
That he suggested go S corp.
Right. So that's,
What if, like, say it's your husband and wife as joint owners? Like, do they have to take two individual checks, or is it because you're a husband and wife, you can take that as a single?
just one paycheck.
And that's just considered
Yeah.
as-
I have a lot of contractors that both the husband and wife. Here's another good reason to take a paycheck. A lot of people in this private room have a hard time saving to pay their tax bill at the end of the year. And so what we do, is we put everybody at single and zero. And we even add 100, 200. So that little $1,000 paycheck is nothing but to stay in compliance. I do get a lot of people saying I can't live on that. That's not the idea. But we'll take as much of that $1,000 as they can afford, because if I take, if you're making $1,000 a month and I take $500 for taxes, you're not going to feel it compared to the $15,000 check you'd write at the end of the year. So that's the other reason for doing the payroll.
No, don't apologize. Go.
So, with being the S corp taking the payroll each month, I was told to do an under distribution when I just needed money. Is that correct?
Yeah. Real quick here, if I make $100,000 a year and Garrett makes $100,000 a year, but Garrett's very frugal, he has $90,000 in the bank at the end of the year, and I have 10 grand because I like all the shiny stuff. Who pays more taxes? They're the exact same. A lot of contractors struggle with this. So if you make $100,000, you're going to pay taxes on $100,000. Draws and distributions have no bearing on anything. That's your money. You're paying taxes on it, so you can take it whenever you want. Yeah.
Cool. Great question. All right, we're going to move on to the second one, but before we do, like I said, you can stay up here. It's fine. I want you guys to think of an action item, okay? We just talked briefly, about 10, 12 minutes, about structure, okay? So what's an action item that you need to do when it comes to the structure? Is it a question that you need to ask your existing accountant? Is it that you need to schedule a call with him? Like, what is it? I want everybody to have some kind of action item when it comes to understanding tax structure. It might just be reading an article, but you need to have something that you're going to do with this. So take about 30 seconds. If you don't have anything to write down, you got a phone, and it's got notes, or send a note to your wife, whatever. But write down 30 seconds, what is it that you need to do when it comes to tax structure? Either way, right? The point is that you need to take action on this stuff. Fair? Okay, number 2, the dirty B word. Who wants to guess what the dirty B word is?
I know one.
Broke? You know one? It's a different room, bro. Not the right room. Not the right room, right? Budget. Get your heads out of the gutter. Budget. Okay, who right now does a budget? Either annually, monthly, weekly. Who does a budget? Raise your hand. No, go ahead. Raise them high. 1, 2. Notice I'm not raising my hand because I'm very inconsistent with this stuff. 2 out of this entire room, okay? So that's why it's a dirty word, because nobody likes to talk about it, which means nobody wants to touch it, okay? So what do you think? How does having a budget affect your jobs?
I do budget my jobs.
Oh, you budget your jobs. That's good. Who here budgets their jobs? All right, we got about half the room. I like it. But how does it affect your jobs? How many of you guys, before you started budgeting, would get like halfway through a job and say, I have no money? Yeah, right? That would be the School of Hard Knocks lesson on I should probably budget, okay? But guess what? Budgeting affects everything in your life, your cash flow in your business and your cash flow in your personal life, okay? So, turn things over to you. Budgeting.
Well, the number one thing that I'd say probably a solid 50% of the contractors that come in, or really any businesses that's at the 1 to 5 year level, is they're still using their personal bank account as the business account, or they use the business account as the personal account. You cannot use your business account as your piggy bank. I'd say to manage your cash flow, there's 2 things. Have a business bank account and have a personal budget. If you don't know how much it costs you to maintain your household, you're just pulling money out of that business like you have a faucet that money comes out of. You need, as small contractors or contractors trying to grow, you need cash. And figure out, take 3 months. The best way to do this is take 3 months bank statements, add up everything on your personal bank statement, showing you, your rent, your utilities, your phones, your groceries, your wife's eyelashes, eyebrows, and because that's part of the deal. I see it all the time. And come up with a budget. Sit down with your wife and say, look, we're going to take $1,000 a week for our personal, and that's all that comes out of the company. If she wants a new pair of shoes and you already spent the $4,000, it comes out of next month's budget. You have to be firm on that. The second thing is, I've always used, when I first started my companies, I created a zero balance in my head for my bank account. What that meant was, it started out that if I had 10 grand, that was my zero. As the company started growing, it was 20 grand. I've told my partner that when I get under 25 grand right now, I get a little uncomfortable because I know and I'm an accounting firm. I don't even have people, you want your tax return, you got to pay me before I give you your tax return. So my cash flow is pretty good all the time. But when I was in the contracting business, that doesn't always happen. So the majority of the time, people don't pay you when you have 30-day terms with your customers, contractors. I never pay anybody in less than 45 days. My material bills, you can't do that to subcontractors because they'll never come back. But I'm talking about material houses, right? And with us, when we were doing roofing, it was 100% insurance work. So we didn't get paid for 45 to 60 days. So I went in and negotiated 60-day terms with my suppliers. That's something that is very available to you. You got to have a good explanation. You got to have a good sales pitch for your supply houses, but negotiate terms that are more friendly with how you're collecting money. And you can always sell that to a supply house. Cash flow management. So I lived through the 2007 and 8. I had a large construction company in Portland. Cash flow, when you have financial or cash flow problems, it will consume 25 to 50% of your week. Figuring out, somebody said something about payroll. I remember during 2007, I made payroll, and I had 35 guys. I made payroll on Friday. I was already stressing about how I was going to get money for the next Friday. And that is not a fun place to be. It doesn't go away when 5 o'clock hits. It's with you at home. It takes a toll on everything. So don't get in that position. Build a backlog. Don't get comfortable because you have a big job. You got to be selling all the time to build that cash flow. Something that Garrett mentioned a little bit is we all have contracts, and we talk about the scope, the schedule, and the price. But How many people really talk about how am I going to get paid? When am I going to get paid? Because if you just walk up to a homeowner or a contractor and say, hey, I need another 10 grand, and we've already bought, spent the money on materials or whatever the case is, they can't just, and people would come to me and ask me for a check sometimes, and I'm like, guys, my paydays are the 15th and the 30th. Come see me on those days. So you got to discuss that. Just because you have a contract, a solid contract, doesn't mean you're going to get paid on time. Have a good conversation with either the homeowner or the general contractor or the sub that you're working for, and make sure that you have timing arranged with your payments. And then a deposit, 30% deposit. I mean, you can't work without, I'm not going to buy somebody else's roofing materials. Or I had a client that came in the other day and he's doing a gutter job that's 60 grand. The heat tape that goes around the house was $22,000. And he didn't ask for a deposit. So it's that part is very important. And anybody, if you present it properly to say, guys, I have to buy, we had framing crews. If I'm not going to go buy your lumber pack, you got to give me some money. So they know they're going to run their business just like you're running yours. They're going to ask whoever they're building the house for a deposit. So ask for the deposit. And talk about the timing of when you're going to get additional progress payments. Percentage complete is something that works in the home building and commercial area where, every month, if your costs are 100 grand and you've spent 45, you're 45% complete. I'd always bill 50 or 55%. You always want to stay ahead of your percentage complete billing. So that's important. One of the things I thought about on the way here is that everything's not going to apply to everybody, because a lot of people, if you're a service plumber versus a new construction plumber, the billing is all going to be different. Right, Tyler? All right. And it's good if you have half, that's the thing, diversify. Half service plumbing, half new construction. So your service plumbing can pay for your dollars that are having to go out for new construction. And then the biggest thing is we should walk out through the parking lot and see how many $1,000 car payments we have out there. Keep your costs low. I'll tell you, after living through 2007 and 8 as a contractor, the people that failed were the ones that had car payments, all the fancy shit. You don't need an $80,000 or $90,000 truck to run a business. So I think that's really important.
So this actually brings up a really interesting point, right? So we're talking about a little bit about budgeting, a little bit about cash flow, which is kind of bleed into this next topic. But if you can't control your money now, what makes you think if, we go to war with Russia, who knows? Things go sideways, that you're going to be able to control it then, right? So you have to learn to control it now. And he brought up a couple of really interesting points. How many of you guys take a deposit, whether you're working with a client or you're working with a general contractor? Raise your hands. That's about half of you. What about the other half? I know, Lauren, you have a unique business model there. But for those of you who are not taking a deposit, the question is why? Why are you not taking a deposit? You were literally putting yourself in the hole right away. Now, were you taking a deposit when you first started?
Yeah, it's not a big enough one.
Not a big enough one, right? Were you taking a deposit? No, right? And so we've worked with a couple guys in the room to start to do that, but you have to understand, exactly like he said, you can live off of beans and rice, cool, but like we said at the beginning, that's not why you got in contracting, okay? That's not why you became an owner. So be smart about things. Understand what it takes for you to survive comfortably and make sure that your jobs are able to provide for that. Which brings up a second point. Should you be taking jobs that don't pay? No, please no. Like, being busy and being productive are not the same things. So don't be taking jobs where you're not going to get paid. Don't be taking jobs where other contractors have warned you not to work with this company or this individual because they don't pay. Oh, but it's a big contract. But who cares if they don't pay? Fair? Okay, so any questions then when it comes to budgeting or your money? It's a pretty simple concept that we just need to apply. So next thing, again, what's the action item? What are you going to do when it comes to budgeting and how it affects your cash flow? For some of you, it's like, I'm going to start charging 30%, 25%, like whatever it is I need to up front so I don't start out of the hole. For some of you, it's like, I'm going to sit down with my spouse and I'm actually going to do a budget, right? What is it for you? So take about 30 seconds, write it down. This is a thing that I'm going to do when it comes to budgeting. Some of you guys have heard me say this. If not, and if you have, I'm just going to repeat it, right? Revenue is vanity, profit is sanity, cash is king. I don't care how much money you bill or charge on a job. I don't care. I've seen businesses do $5 million and the owners are broke. Revenue is irrelevant. Nobody cares, and you shouldn't either. Profit is sanity. What does that mean? You're making money, which again, you should know ahead of time if the job is going to make you money or not. This is where budgeting comes into play, okay? And the third, cash is king. He already mentioned it, okay? Money that you keep in your bank account. Now, we've talked before about different levels inside of your business, but at a minimum, you should strive to have 6 months worth of livable income in your bank account. Why?
You never know what's gonna happen.
You never know what's going to happen. Plus, welcome to Idaho. It's April and it's still winter, and a lot of you guys are still affected by that. I think it's been like 6 months. I don't know. I'm like literally wake up and I start scratching myself. I'm like, where's the sun, right? It's going crazy. But there's cycles that happen here that don't affect a market like Arizona, where I'm from. So you have to take that into account. How do I survive through the winter? Funny, budgeting, right? You know how much you're going to need every single month. And so in the fat months of the summer, it's when you start to be like a squirrel, put a little bit away, right? And allow yourself that opportunity to live comfortably. All right, what does your current cash flow cycle look like, right? So again, this kind of bleeds into the other one. How many of you guys know how long it normally takes you to get paid on average? Omar's like, right? Kind of knows. Then there's like 5 hands in the room, right? So what does that tell you? What do you think, Kenny? What does that tell you? If you don't know your cash flow cycle, what does that tell you? It tells you a whole lot of stuff that you probably don't want to say. But the worst thing is, you wake up every single day, and what's the only thing on your mind?
Gotta get that money.
I got to get paid. But you don't know where you're getting paid, and you don't know when you're getting paid, which leads to more stress, more anxiety, so on and so forth, right? So again, he already talked about some of these concepts. The number one thing is build it into your contracts, right? You should know at the beginning of every contract, I get paid X percentage. When I'm halfway through, sometimes, then you get another 25 and then 50% at the end. Some of you guys, we have an audio video guy, Jared, he's 80% up front. That's just what he charges, right? So for some of you guys, you're like, all right, we'll get started. We'll end up footing the materials and the labor and the this and the that, right? But where does that put you? In a hole. And now you're desperate, okay? The point is you want to get to a point before you finish the job that your material costs have been covered and your labor costs have been covered. Because then that little extra that you call profit, do you want it? Yes. But are you desperate for it?
The other thing is once you attach those materials to that property, then you got to wait. You're at their mercy to pay you. You can't go take your lumber, your roofing materials, your drywall, your concrete. It's there. So that's why that deposit to cover your hard costs is really important.
So I want you guys to take about 30 seconds, and it's the majority of the room. How much should you be charging up front to cover, at a minimum, your material costs? How much should you be charging? So take a second, write it down. What was that?
I do 50%.
Yeah, I'll bring you up right now.
You'd think it'd be the other way around.
No, because contractors are the ones with the problem. Homeowners are the ones paying.
What is your business?
Roofer.
Okay.
You'll have a lot to talk about.
Yeah.
But I don't take a deposit until supplies hit the roof, because I hear a lot of people that say, oh, this person took my deposit,
Yeah.
they ran with it. So figure it's good faith, okay. if
That's
materials are
a
being
really
delivered-
good. When I had a person that would not want to give a deposit. The only accommodation I would make is when the materials hit the roof or the ground.
Before we start
Yeah.
opening the
Yeah.
bundles,
They give us the
We'll
money.
bring this up for everybody here. Okay. All right. Who does not have any idea how much they should charge up front? Seriously, raise your hand. Now's your chance to figure it out. You got a room full of contractors. So everybody's got it all figured out? So everybody's not going to have any more cash flow issues next month. Nobody's going to bring this up in conversation. When I run a poll on my Facebook group and 50% of the people identify cash flow as the issue, it's not going to be the problem anymore? Yeah? Okay. If you want to talk afterwards, we can talk, talk to either of us. So I want to bring up 2 examples, right? Really interesting examples. So we'll talk with Scott. How much do you charge up front?
50%.
50%. How many of you guys would feel comfortable charging 50%?
More than comfortable.
You do now, yes. You do now. Yeah. Right? So you should be comfortable. Why?
Because I'm worth it.
Because you're worth it.
I also charge them $500 just to put on the calendar.
See, and I charge 10% to take them on the calendar, and then it's another 30% 30 days prior, and then it's another 30% when I start.
And then like 45 days before too, right?
Yeah.
Dude, I don't know you got 50% out of that. I counted 10, 30, and then 30. I'm like, there was no 50 in there anywhere.
I up the game.
Aaron, can you
Actually, I really like the contract.
Yeah.
I actually like your contract. So it's cool.
So talk to him, really good example of how we changed some stuff to make sure he got paid up front versus waiting for all these things to happen first. He's footing the bill and then trying to get paid.
Well, one of the things too, you get them charged 10% on a contract, it's non-refundable. So if they back out and I lose a job, I just made 10% of that job for doing nothing but writing a contract and doing an estimate. All my deposits are 100% non-refundable, and it says that in the contract on every deposit it's non-refundable. You pay me 30% and you decide to back out, that sucks.
Yep.
We've done a lot of work. You're doing a kitchen remodel.
Yeah.
You've done the layout of the cabinets. You've done all where the electrical is going to go, and then they say, we're going to think about it. Well, if you didn't get yourself a 10% deposit, you just gave a bunch of work away for free.
$250. I didn't incentivize
Yeah.
anybody to.
No.
Then I would do like 10% up front when I was getting started, but $250, that's nothing to, especially when you're doing $60,000 to $100,000 jobs. So that's nothing. So.
Kind of behind the 8 ball. So I want to bring up Julie's example really quick because some of you are going to have to modify based off of either the trade that you're in or the people that you're dealing with. So Julie, we said money up front. What's the issue that you run into when you ask for money up front?
People are skittish from contractors and they've had deposits stolen. And so what I did, because I have the luxury to do this, we have materials delivered onto the roof. And until we touch those bundles, they could still be returned. So how I kind of met homeowners in the middle is I take 30 to 50% deposit depending on if you're a homeowner or a contractor when materials are being delivered onto the roof. And if homeowners are not paying by the time we get ready to open the packages, then that's a red flag for me. We will stop work until I get payment.
Yeah. So again, try and hedge your bets based off of the type of contract you are, the market, so on and so forth. And again, Dan's got a lot of strategies for you to use. Obviously, he's got experience in the space. So Lauren, again, great conversation with him to figure out like, hey, this is what we're running into. Like, what's the best way to deal with this? Okay. So again, if you're having issues, you have a resource that's available to you. Okay. If you're having issues, you have a room full of peers that you can ask. How are you dealing with this? What do you do about that? Okay. If you have issues, questions about contracts, Scott's got a really good approach. Jeremy's got a good approach. Tyler's got a good approach, right? So talk to these guys, okay? Get this stuff figured out. The last thing that you want to do is keep dealing with cash flow issues. Fair? All right. Now, before we move on, what is the thing that you need to do now that we've been talking about cash flow? Is it that you need to charge more up front? Is it that you need to figure out how much you can comfortably charge? Like, what's the thing that you need to do when it comes to your cash flow? Figure out what 50% really is? I mean, whatever. I'm not here to judge. All right, 30 seconds. Write it down. What is it that you need to figure out when it comes to cash flow for you and your business? I really won't play music, but my phone is live streaming. So
Okay.
Get rid of the awkwardness in the room.
Yeah. How do you spell your last name?
GIANUZZI.
We got cards in
And
there.
I've got some business cards in the back.
We'll get you. We'll have Melissa hand out business cards. You got to come over for that. Turned out good last time. Turned out good. All right, Josue, what do you need to do when it comes to cash flow?
Honestly,
Yeah.
I don't have any idea.
So then it's just talk to an expert. Like if it's as simple as that, like if you guys don't know what to do, it's okay. Just figure out what your next step is, which might just be talking to an expert. You got one in the room. Cool. All right, Hector, what do you think?
I think charging, like kind of like you said, going out there and not wasting your time. I think what we need to do is figure out on plans where we don't have jobs where we don't have those plans sent to us, and we have to go out there and waste our time, bidding that out. I think that's a great idea that we can add.
Yeah. And you guys, it's a game, right? And if you heard Dan right, he said communication. Communication is key, right? Realistic expectations tied into contracts, okay? Some people are not used to using contracts. It's the old school, shake your hand, right? Put her there, right? But that's no guarantee for you, zero. And it's going to burn you more often than not. So have a contract. But also, people are humans, right? Have a conversation with them. How many of your contracts, Lauren, have been modified because you literally sat down in front of somebody face-to-face and had a conversation? Yes. It changes things, right? You're a real person. They know who you are, okay? So contracts and communication. Last piece, the only guarantees in life. What do you think they are? Death and taxes. We're not here because somebody passed away, so we're not going to talk about that. But we are going to talk about taxes. Now, we started talking a little bit about taxes, but there's all kinds of games within the games that you can play, okay? Now, how many of you guys have a specific tax strategy? Not that you pay taxes, but you have a tax strategy. A couple of you, maybe, kind of. You just pay taxes. Some of you pay annually. Probably most of you pay annually. Some of you guys pay quarterly. Good for you, right? But do you have a tax strategy, right? How do you minimize your tax liability? How do you maximize the amount of deductions that you can take, right? It's a strategy behind it. So how does your tax strategy then affect your bottom line? How many of you guys at the end of the year, your accountant says, go buy a new car, and you just go buy a new car, even though it's a $1,000 payment? Well, my accountant told me to do it. Anyway,
All right.
not to steal your thunder, but
Yeah.
just set it up.
So I had a different thought process for this part, but he sparked some new thoughts. The number one thing, I was with the 10th largest firm in the country for my first 5 years as a CPA, and the first thing they ever taught us is always keep your tax liability out in front of you. So what you want to do, I had one of my contractors come in and he bought $25,000 worth of gutter materials, a different gutter company, in December. And I was like, what a great thing. He had made like 75, 80 grand, and that took him down like to 45 grand. So he's in the 10% tax bracket. Very, very smart. So if you lease a building, pay some of your payments in advance. So the IRS is on a cash basis. All your taxes are on a cash basis. What that means is that if you get paid once a month, in December, you get paid on January 5th, where does that income get reported? 2022 or 2023? 23. Yeah, into the next year. So you want to do the same thing for expenses. You might even, I have a lot of real estate agents that say, they come and talk to me about when their closings are going to happen. Well, if they've already made 100 grand, I push their closings till the first week of January so we can push that income into the following year. So that's very important, is planning when your income is going to hit and when the expenses are going to hit. So you guys have that opportunity in December to play with those numbers if you've budgeted and managed your cash flow well during the year. If you haven't, you're going to need to bill it in December and get your cash. But that's a good way to manipulate your taxable income. Let me just see here. So there's a bunch of different taxes, and this is a part that overwhelms people. You got to give 1099s for all the people that you're paying stuff out. If you don't give 1099s, it's $285 penalty per subcontractor. The next thing is the payroll taxes. There's 4 different payroll taxes when you start doing payroll. The number one way to get in trouble with the government is not paying your payroll taxes. They will be at your door. I've never in 32 years seen the IRS come to somebody's house because you owe income taxes. I have seen people go to the Idaho State Tax Commission, go stand next to the cash register at a restaurant and collect money as it's coming in because they didn't pay their sales tax or the payroll taxes. Sales tax and payroll is not your money. It's money that you've taken on behalf of the government agencies and you're holding it for them. So if you don't pay it, it's a very bad thing. So those 4 taxes, federal withholding, federal unemployment, state withholding and state unemployment, critical to your sustaining your business and active. I do have one client from 15 years ago. He owed $5 million in payroll taxes, had a race car team. He served a lot of time. They came in, the criminal division of the IRS came in with guns out, and they arrested him, and he did a lot of time. The wife did time. The brother-in-law did time. So it is a very serious thing. And it's the #1 way contractors get in trouble with not paying taxes, because you need that 5, 10 grand to pay a vendor. And so you just borrow the money and you don't have the money to pay later on. Income taxes are due for a business just like they're due for you when you're a W-2 employee. It's due as you earn it. Garrett mentioned a little bit about estimated taxes. I think out of 1,100 clients, I have 2 people that pay estimated taxes. It's not common. If you owe 20 grand, the penalty is a couple $100. So a lot of small businesses use that money to keep churning their business. But the problem is 99% of those people don't have the discipline to save for year end. If you're one of those people, and I'll tell you, I'm a spender. I gotta put money, pay somebody, I gotta pay them in advance, because or else at the end of the year, I'm not gonna have 50 grand to write them a check. I bought a car or I bought something else. So if you don't have the discipline, pay the quarterly taxes. If you're a person that's a saver and you know who you are, and you want to use that money to continue to build your business, the penalties are very small. It's falling behind 1 year. As soon as the second year hits, it's 10% interest every 10 days. That's how they compound. I have a guy that owns a little bar. He owes $700,000 now. Hasn't paid taxes in 10 years. And he's pretty much said, why should I pay anything? You get so far behind, it gets overwhelming. So stay on top of the thing I would say as far as taxes is stay ahead of the game. If you're not a disciplined individual to save, pay quarterlies. It's not common, but pay them. And if you owe 5 grand a quarter, pay anything. Pay 1,000, pay 2,000, pay 3,000. Pay something so that it's not such a big burden at year end.
So I know this has come up before, the whole buying a vehicle at the new year. So what's your thought on that whole concept? Obviously, it's a write-off, reduce your amount of taxable income, but there's the other side of the coin.
Yeah.
So
I had a framer come in. They're just one Hispanic crew. Their net income was 330 grand. He just came in last week to sign his tax return, and he's like, "Should I buy a truck?" What should the answer be?
Too late.
No, not necessarily. For next year, do you need one? You really going to go out and buy a truck if you don't need one? And he said, I need one, but I can't spend 70 grand. He said, my budget's about 25 grand. I said, buy the truck if you need it. Buy the trailer if you need it. But to just go and buy an asset so that you can save taxes is retarded. Because I'm just being, I say it how it is. I mean, you're going to spend 50, 60, 70 grand so you can save about $7,000 in taxes on a $70,000. It's roughly 10% you're going to save on taxes. That doesn't make sense. It doesn't make sense because you're going to compound it with interest on top of that. So he has a truck, but it broke down once, and so he wanted to have a spare truck, which is very reasonable. If you're a granite guy and you need another saw to cut granite, buy another one, because a backup saw is a good thing. If your saw goes down or whatever your tool is, trucks, when we had roofing crews going out, if a truck broke down, it fucked up your whole day. And so you want to have redundancy in that area, but not just to save a little bit of taxes.
all right, who has a question then when it comes to tax strategy?
So, do you recommend other strategies like SEPs and things like that?
Absolutely. Obviously, that's for a more,
Wait, explain what that is, because I think most people
Can
don't
you
know.
repeat that? I didn't catch it.
basically tax deferral, any kind of tax deferral program like a 401k, an IRA, a SEP. A SEP is a really good one. The annual contribution is now up to $22,500, which is awesome, but that's for a more established, a more seasoned business that has that disposable income, to be able to put away the 22.5. The nice part about a lot of these plans is that you have to have a plan document. That plan document, it's like a half-baked cake. There's companies like Edward Jones, I mean, whoever your financial institution is, they have these plans that are half done, and you get to pick choices. Do you want to wait because it has to be non-discriminatory. That's part of the ERISA rules. You can't say the owners get 22.5, but the employees only get 5. It has to be the same option for everybody in the company. So the way you control that is by, in the plan document, say you have to be there full-time for 1 year before you can participate. Because you don't want somebody being there for a month and getting to share in the profit sharing through a SEP. So how long they're there, you can borrow money from it. So if you're putting 22.5 into there, let's say after 3 years, that's how I bought my building actually. I had been putting $1,000 a paycheck into my 401k. And when this building came available, I borrowed the money from my 401k to buy the building. So, and then you pay yourself interest. Beautiful thing. You borrow money from yourself and you pay yourself interest. So I totally agree with those. And our platform for payroll is through ADP. And we have all the 401ks, the SEPs, and they're really good to set up.
All right, what other questions do we have?
What do you do? You have people that turn in their taxes late and things like that, where they get behind and then they pay extra penalties and things of that nature.
Turn in
How do you combat something like that?
turn in taxes late. So we just filed 500 extensions, in our office because we know a lot of people aren't going to show up. We filed them all about a week ago. We'll call all our businesses. We won't call all the individuals and say, guys, an extension is for your tax return, not for the payment. So if you owe 20 grand, just because I file an extension, it doesn't give you an extension on the money you owe. You have to send money in with your extension. And so there's really no getting away from the penalties. There's non-filing penalties, non-payment penalties, late penalties. There's penalties if your mistake in your tax return is more than $5,000, $10,000, the penalties grow. Negligence penalties. I mean, basically the best thing to do is to have a tax professional that watches your stuff, because if ever we've made a mistake or any of your accountants make a mistake, they should be on the hook for the penalties, not you. That's the benefit. That's one of the benefits. So.
You said there's a penalty if you don't send out 1099s.
Mm-hmm.
Our accountant should be doing that.
If you've asked them to.
Yeah, the 1099s. Is there a limit on if you paid that sub a certain amount, like it doesn't qualify?
$600.
Okay.
It could be a sub, it could be an employee, it could be anything. You guys have all heard that Cash App and Venmo and all those are going to be sending you 1099s. They couldn't get it in place for 2022 tax season, which our current tax season, so they've delayed it for a year. And I think the reason is because we all pay kids and family members, and the wife needs money for the hairdresser, so you Venmo her. Imagine getting 1099s for all that stuff. So I think it's going to have to be like when you file sales tax. They have lines where you put non-taxable items. I don't know how they're going to do that. It's going to be complicated, but they're saying that now it'll come in the next year.
Isn't that double taxation? Really? Because we already earned that money, it was already taxed on it, and now we're sending it to our kid?
It's not going to be taxable to you, it's going to be taxable to your kid.
As a gift?
Well, how are they going to know it's a gift? Venmo doesn't know it's a gift. That's why I'm saying it's going to be very complicated for them to, but here's the thing. I owned a nail salon here in Meridian, right up the street. And every Vietnamese person doesn't take, that do nails, they don't take credit cards, they don't take checks. We want cash. They don't, and every hairdresser, eyelashes, eyebrows, hey, Venmo me. There's millions of dollars being, and it's not fair to the rest of us that are paying, right? I mean, we all pocket a little cash. That's not a huge deal, but when you pocket 99% of your revenue, you're hurting all of us. And so it makes sense. I just don't know how they're going to accomplish that.
All right, any other questions? You can ask afterwards if you're too shy. Don't worry about it. Okay, so again, what's the action item you need to take when it comes to tax strategy? Do you need to figure out, hey, I need to have a 401k because now I have employees. I want to be able to stash some money away, deferred, and be able to borrow on it, right? What is the tax strategy that you need to take or put into place? Is it that you need to finally get an accountant? Because I know a lot of you guys don't have accountants. Is it that you need to figure out a way so that you're paying on a regular basis without having to wait till the end of the year, and then you're staying up at night praying to Jesus, please don't let me pay too much in taxes? Like, what is the thing that you need to do so that you don't expose yourself, right? That's what this whole game is about. Remember, we're talking about cash flow. We want to keep more cash in your pocket. We want to keep you cash positive, right? All these strategies are not reactive strategies. It's not wait till the end of the year to get it done. It's get it done now, right? And you heard Dan talk about it, right? You can either deal with it afterwards or you can set yourself up ahead of time. So what is the thing that you need to do then when it comes to tax strategy? One thing. Go ahead, write it down. You got about 30 seconds. So, hold on. We're gonna get into that right now. Before you guys all freak out. Okay, so Dan is one of our experts inside of the network, right? So as part of that, being a contractor, he has some specials that he's willing to share with you guys. So bookkeeping. What does that look like?
Bookkeeping is $150 a month, and we give you a P&L 15 days after your month end every month. It's, for that, you guys aren't in the business of doing bookkeeping. It just doesn't make sense for $150 to do your own accounting.
Literally find a job and charge them an extra $150.
Yeah.
Can you do P&L statements per job?
I'm sorry?
Can you do P&L statements per job?
I would.
We run like 6 or 7 jobs in a month. And
Right. I would, if I were you, I would pick, I might give you that for the first 90 days to help you figure out where where your costs and overhead. But if we did that, I might charge you. Obviously doing your accounting for a month for $100, it's a loss leader for us. We want to help you guys, because if you guys are successful and you're my clients, I'm going to be successful. So it's a win-win.
All right, payroll.
Payroll is $125 a month if you are just an owner paying monthly. Because if you're making that $1,000 a month, I'm not going to pay you $250 a week. We just give it to you once a month. If you have, a lot of the contractors like to get paid weekly. It's bi-weekly is $150 and weekly is $175. We do all your filings, all your payments, direct deposit. We can put it on cards because a lot of people don't have bank accounts. However you want to do it. And it all goes through ADP. We don't handle your money. ADP does all the transferring.
Is that per guy?
That's up to 5 employees. And it's an extra $25 for another 5.
Chris is like, son of a... Hey, this is a good thing. This is a good thing. Josh.
If you do accounting plus payroll, that's $300 a month? Is that
That's a good average, yeah.
All right, taxes.
And what that does, real quick, what that does for you, Tyler's wife was in my office for 2 hours. I'm $200 an hour. That was free because they're clients. So you get my time. That's on top of doing those services that inexpensively. So I have great staff. They, once I get you set up, I have one lady that does all our payroll. I have another lady that does all the bookkeeping, and then I have my woman back there that is the one that keeps us all in line, Amy. So we have a lot of resources for you in there, and we're there from 8 in the morning to 8 at night during tax season, and 8 to 6 the rest of the year. So we're there a lot.
Monday through Friday, I'm assuming.
Right now it's Monday through Sunday, but
The
The rest of the year is Monday through Friday. Yeah. That's my goal, Monday through Friday. It's been Monday through Saturday, but my goal is Monday through Friday. As far as taxes, $300 for a personal tax return, $600 for a business, flat rate. Yep. You pay more than that at H&R Block. So.
Did you guys all get cards on this side? You got them? Okay, just making sure. All right, so last thing, before Dan leaves, if you are not a client, which a lot of you guys are, you're interested in what it is that we do here inside of the network. We do a lot of stuff, but really more than anything, it's to help you build a business that supports a lifestyle, not the other way around, okay? Obviously, Dan's a resource. If you've been here before, we have experts when it comes to, obviously, accounting, when it comes to sales, marketing strategies, running your jobs. How many of you guys use a CRM? We have an expert when it comes to CRMs. Like, everything that you would need to run your contracting business, we have inside of here. So if you're interested, there's a QR code here. You can scan it. It's literally 5 questions. Give us your information so we can reach out to you. We appreciate you guys coming by. But really what I want you guys to do is give Dan a big round of applause. Thank you. Thank you for coming.